Reece Agland, Manager Member Integrity for the Institute of Public Accountants here in Canberra on Budget Eve. I'm here to talk a little bit about what we suspect will be in the budget in relation to superannuation and financial services. One of the few issues that has already been subject to a budget leak is in relation to the reducing of the tax offset for high income earners. The government has already said that they will reduce the tax benefit for those earning over $300,000. Instead of paying a 15% rate of tax, they'll now pay a 30% tax. It's still a reduction on their marginal rate of 45%, but it's yet another attack on superannuation, particularly on people's ability to contribute to superannuation. We saw in the MyEFO that the government had decided not to index the rates. So again, that was another hit to superannuation. And in relation to those over 50, the contribution cap is going to be reduced from $50,000 to $25,000, except for those with under $300,000 in assets. We're not too sure whether there'll be any other tinkering around with the superannuation laws. We suspect it's one of the few honeypots that the government has left, so we wouldn't be surprised if there are a few more issues that the government releases on budget night, particularly focusing on high wealth individuals. In relation to financial services, we still haven't heard from the government in relation to the accountants exemption. We're not too sure whether an announcement will be made as part of the budget process or after the budget. So we'll be looking keenly there to see whether there are any issues that we need to be concerned about in relation to financial services.
Tony Greco, Senior Tax Advisor, Institute of Public Accountants. We're here in Canberra on Budget Eve. We know the government's committed to a surplus and it's got a sizable deficit to unwind, and we're all expecting a surplus, a modest surplus. To do that, it has to cut a lot of expenditure and also possibly defer expenditure as well. So it's got a fairly large task ahead of it. It's got a $40 billion deficit for the current year that it has to somehow unwind. We already know that defence is going to be cut, or expenditure in relation to defence. We also know that the private health means testing is going to be introduced come 1st of July. The education tax rebate is also going to change. There's some of the things that have already been leaked. As far as other measures, we've got the loss carryback. That's something that the IPA has been lobbying for quite some time, so we're very pleased if that does come to fruition. It's in relation to loss companies being able to claw back some previously paid taxes, so we're very much looking forward to that initiative. There's also small business measures which will come into operation. They've already been legislated, but they'll be part of the 12-13 budget. That's in relation to small asset write-offs, but there's also some negatives in there as well. The entrepreneur tax offset will cease at the end of this financial year, so for those affected, that's going to be a negative. We've also got the tripling of the tax-free threshold, and that's something that will probably result in a fairly small tax benefit, because there's going to be the unwinding or the significant reduction in the low income tax offset. As far as the flood levy, we actually haven't heard anything in relation to whether that will cease. It was always intended to be for only 1 year, and so we'll have to wait on budget night whether that will be the case. One other thing to mention is that the IPA has been invited in the Treasury lockup, so during budget night we're going to put together a communication as part of our tech ad, and we'll in the early hours of Wednesday morning all our members will receive a full update on what exactly will be in the budget for 12-13.